Hi, I'm Josh.
And I'm Derek. We're both experienced founders and CEOs of B2B SaaS companies, and now we're your hosts.
In today's world, getting accurate information about B2B SaaS products is tough. User review sites are manipulated, and research reports are often wildly inaccurate or paid for. That's why we're here, to bring you information that no one else does.
We go straight to the software companies themselves to break down their products, show you a demo, and give you our honest opinions. Whether you're a software buyer, investor, or user, this podcast is for you.
All right, welcome back, everybody, to another episode of Talk SaaSy to Me. Today we have Ron from Uplinq, and Ron, why don't you go ahead and introduce yourself and tell us a little about you.
Yeah, okay. Well, thanks for having me, guys. Appreciate the opportunity. So I'm Ron Benegbi, founder, CEO of Uplinq. Uplinq is my fifth, and as I've been explicitly told, my last startup. So really excited, super excited about that. I've had a couple of good runs where you would call them successful exits, but I've also had a horrific flop in between that. So certainly not batting 1,000 as an entrepreneur. And, but Uplinq is something that's very meaningful to me, very near and dear to my heart, as I've always been a small business owner. I've grown up in a small business family. My successes and my failures have come as a small business owner. And, what we do at Uplinq is we help get extended working capital into the hands of all small business owners worldwide by working with lenders and enabling them to look at data through a different lens and evaluate the risk and credit of a small business owner in a completely different way. That ultimately leads to them saying yes a lot more often. So that's a little bit about me, and happy to answer any more questions.
Awesome. Thanks, Ron. And maybe you could also tell us a little bit about why you're the right guy to solve this problem. I know you have a bit of a backstory that you shared online before, so I'd love to hear that.
Yeah, for sure. I think it's both myself and my co-founder, but I'll start with myself. As I said earlier, there's a personal tie for me and Uplinq. I'm an immigrant. My family migrated to Canada in the early 70s. And I know it's hard to believe I look so young. I appreciate both of you saying that. But we were poor. Like, my dad was baking bread at night to put food on the table. And he went to a bank in 1973. Yes, I'm dating myself. And he asked for a small business loan. And the banker told him, look, Mr. Benegbi, we really don't lend to small business in such a way. You don't qualify. However, I believe in people. And here's $5,000. And my dad was able to take that money in 1973, start a small business, which eventually turned into a larger business, but more importantly, really set the tone and really provided our family with the opportunity it needed in a new country, and was the backbone to what I would call our success. And, my dad told me this story. I'll never forget that, because most small business owners today don't have that opportunity. They don't get an empathetic bank manager to look beyond just traditional information to say yes or no, like they did back in 1973. So for me, it's a very personal story. For my co-founder too, he's one of the original godfathers of AI and financial services. He's even older than me, if you can believe that. So a couple of not so young guys starting this new fintech startup, but he's been spending his whole life in building some pretty sophisticated technology to assist lenders in making better credit decisions. So I think the combination of the two of us really make for a solid team, and the people, of course, around us, in order to help solve this very serious problem.
Yeah, and for our viewers, on a personal level, I can relate. So when I had a prior startup, we were a B2B SaaS company, and we were a few million ARR and profitable, and great cash position, and we still struggled to get a loan ourselves. And we wanted to use debt to fuel our growth. And we went to a highly recommended banker, not a traditional bank you'd have heard of, but one that said they specialized in software and so forth and so on. At the end of the day, they said, you need to get an audit before we can give you money. And, after a month of sending numbers back and forth, they do from the get-go, we didn't have an audit, and it was a big waste of time. We ultimately did find a lender who'd work with us, but, whether it's starting the bakery or even, profitable multi-millions, B2B SaaS company looking for a loan or whatever your industry may be, it's not as easy, I think, as people sometimes think. Or if you do get it, you might get some outrageous terms because they're saying, well, what's the risk here? I'll just maybe take advantage, if you will.
Yeah, no, for sure. And I think Josh, many people can relate to that story. I know I can personally relate to that story. A lot of people can relate to that story, and that's the problem. That's the problem with small business lending. It really hasn't changed that much since 1973. Yes, it's a little bit more digital, but really the philosophy or methodology behind small business lending has not changed. And that is, a banker asks, give me whatever financials you have. Usually they're self-reported and extracted out of a software system like QuickBooks or Xero. Let me run a credit check on you, and I'll make a decision. However, it doesn't factor in the entire story of the business. It doesn't look at other factors. It doesn't look at things like market conditions or the economy or supply chain or labor or just all kinds of different things. And ultimately, to your point, and these are these highly regulated lenders who can only lend at a certain interest rate, it's just easier for them to say no. It's just a lot easier to say no. It's a lot less risky to say no than it is to say yes. And that's kind of where we step in, because for the most part, we're working with these regulated lenders, regulated depository type of institutions, and helping them stay within their credit comfort zone, but showing them, hey, like all of those loans you declined last year, you could have approved half of them if you would have just done this, but staying within your own credit comfort zone. And that's kind of what we're working towards. It's a little bit of a process, but we're seeing some pretty good results in early days still. So.
Talk a little bit about how long you guys have been in the market, and I think I've seen on the website, but maybe tell the audience how much capital you guys have helped get deployed to small businesses.
Yeah, so it's a bit of an unusual story. I know you talked to a lot of founders, and we're about 3 years old, just a tad over 3 years old. However, I felt very strongly when I started this back in early 21 that going out raising money, spending 2 years in a basement, hiring some engineers, coming out of stealth, using the words AI and machine learning in every other sentence with a great PR story behind it, saying we're the best, would not resonate with the buyer I was trying to serve. These are very risk-averse individuals who, they get nervous just like, walking outside the door sometimes. It's like they're very risk-averse. So where the story becomes unusual is my co-founder, who had spent the last 15 years at the time, so now it's been 18 years, building a technology that had already been in market, that had connectivity to a lot of data sources, that had run over $1.5 trillion in lending in dollars, new loans on books to people all over the world over that time. And we were able to take that and move it into Uplinq. So it's a bit of an unusual story. It took us, the first 18 months, we were primarily focused on, just product development and just working on the product and testing it with some, we'll call it design customers, no money, typical stuff, nothing unusual. So it's only been really the last 18 months or so that we've gone to market in a commercially viable way, and now offering this sort of repurposed vision of what my co-founder had built previously. So if you want a number, 1.4, 1.5 trillion is sort of the history, and it's, growing on top of that.
Which is huge. I mean, that's a
big.
huge number.
It's really, we've said that number to Chase, and, they've opened their eyes. So it's a big number, and that's why it brings credibility. So it goes back to my story of, we didn't spend, there are a lot of companies right now out there riding the AI gravy train. Okay, AI is so hot. Okay, so they go out, they raise a bucket of money, they come up, they're great marketers, they spend a year or two in a basement, and now they've got the greatest platform since sliced cheese was invented. That's not our story. And when we can tell a lender, look, you're getting access to, we're leveraging insights and intelligence from over $1.5 trillion in lending over 15 years, over, different market conditions, different countries, different economies, different types of lending environments. It's pretty meaningful. And it has resonated quite quickly with some of these banks, and not just banks, some of these bigger partnerships that we've been very fortunate enough to develop.
That's great. That's great, Ron. Pretty amazing technology. And I know from my history, I used to, one of my past companies, we built risk management software that was used a lot in financial institutions. And so that was quite interesting to see the risk averseness that you mentioned, and the unwillingness to sort of change or take risk, especially for small businesses or people that are not audited or done on that perspective. And that makes a lot of sense. And I guess it feels like in some ways this could open up for at least some of these institutions that don't have business lines that are doing this in any sort of high volume way. It feels like maybe that could even open up new business lines for them with those small businesses, whereas today they're really tight on the number of transactions. This could greatly increase those for them and really, really change the face of the market from that perspective.
100%. We work with all kinds of lenders who are looking to do just that, Derek, really just get into small business in a more meaningful way. We see that with a lot of community banks and credit unions who, these are really community type of institutions who self-admittedly, many will tell us, we need to do a better job lending to small business. We're like this community institution, but we're not that great at it. So yes, so to your point, this is an opportunity for them. And then others, some of the larger lenders, where they're basically declining everybody. Like I was with a week ago today, one of the biggest, we work with very large lender, big regional, super regional in the US. And, they said to me, like, we're very risk averse. That's why we have such, low default rates. And I said to them, you have low default rates because you decline everybody. It's pretty easy to have a low default rate if you don't lend. So, I mean, that's the safest way you just say no to everybody. So for these types of lenders, it's also an opportunity. It's an opportunity to look at how they're evaluating risk, look at additional data points, understand that, hey, this Josh's company, he's a solid guy, he's profitable, he's cash flow positive. This is a good investment for me at the bank, and say yes, as opposed to, saying no right away or a month later. So I think there's a lot of opportunity out there. Because if you think about it, small business is really the backbone, not just of the US economy, but of the global economy. So there's really a lot of opportunity out there.
And I want to get into, we want to get into kind of some of what features are within the software in terms of coming up with this risk profile. But before we do that, I'm just curious, if I'm a listener and I am not a lender, but I am a small business or even a medium business who wants to borrow, how do I find lenders who use Uplinq? Is there any way to do that? So I know I'm not wasting my time, if you will.
Yeah, no, unfortunately, there's no way to do that. But the good news is what we have started to see out there, Josh, is all of this AI hype is really getting the attention of a lot of these banks, both large and small alike, and they're intrigued. They're intrigued by AI and how that plays a role in small business lending, how that plays a role in their own environment, both consumer and small business, as well as other parts of the bank. And ultimately, whether it's Uplinq or whether it's the bank just taking on a different viewpoint by using other tools to help them more fairly assess the risk profile of that small business, that's a benefit inherently to the small business owner. So, I would just, if I were to give some advice to a small business owner, I would say, hey, go into your local bank, ask them, like, how do you look at small business? Is it a priority to you? What are your processes? How long does it usually take for you to approve it? If I apply, what are some things I need to do? And, those types of questions, you'll already start to tell what kind of lender this is. And, hopefully you'll deal with a lender that is a little bit more progressive and is looking at the small business applicant in a much more positive light than in years prior. So that's what I would say, and hopefully over time it'll just get better. But I'm also an optimist. So who knows?
Yeah. I interviewed over 20 lenders before we ultimately chose one at the scenario I was mentioning earlier. So yeah, it makes sense. Had a little spreadsheet. What do they all offer? Pros, cons, et cetera, before I even applied. So tell us a little bit about how your tool evaluates someone seeking a loan. Obviously, we have traditional methods and that a bank's going to use, but where does that stop and where do you guys start?
Yeah, I know that's a great question. So most traditional lenders and most lenders that we're working with have some type of scoring system today, right? Some will have their own internal proprietary scores that they've built. And those are usually maybe the more sophisticated, the larger lenders. Like you don't see that as much, let's say, with smaller banks like community institutions or credit unions. Most will also use a third-party score. So they'll pull a score from a credit bureau, Experian, Equifax. There are other sources of information that they can pull. And then ultimately, they wrap it into their sort of loan origination system, loan process, and they'll have some sort of decisioning process. And most banks will segregate how they look at decisionings. Some are better at auto decisioning than others. And, it's tied into the amount the loan is being asked for. But that's usually the process for the bank. So we come in and we say, look, give us what you have today. Don't stop doing what you're doing. Don't replace anything. Don't look to us as a replacement tool. We're not here to replace anything. We're simply an enhancement, an improvement to what you're doing. So give us the information you're collecting. We'll bring in our own information. We'll also be able to now leverage these insights over that $1.5 trillion that, no other, we didn't spend 2 years in a basement building this and then come to market with a story. We've got $1.5 trillion in actual lending experience for the platform. We'll incorporate all that into a very simple API call, whereby it's embedded directly in the context. You decide where within the loan application process. And then ultimately, you make a decision that's right for you. We're not asking to be your decision engine. So we we're very adamant about that. We're not trying to replace anything you're doing. We're not asking you to rely on us solely 100%. In fact, we tell most lenders it's best practice to have 2 or 3 different scores when you evaluate, and look at a number of different data points when you evaluate a credit application, and then ultimately get to a decision that you're most comfortable with. So I hope that answered your question. Sorry if I babbled a little bit, but it's basically a combination of the bank's data, our proprietary insights and methodology to get a very, very accurate recommendation at the end of the day. It's not a decisioning tool, it's a recommendation tool.
Awesome. And from a bank's perspective, so let's say they decide, or any lender for that matter, let's say they decide to move forward with Uplinq. What kind of implementation process does that look like for them?
Yeah, so, again, here's where we differ from a lot of fintechs. We actually, my partner a few years ago, we were at Finovate and we were presenting, if you guys have ever been to Finovate, big show, New York City, and he was on stage. We were both on stage, and then he was speaking, and he said into the audience, there's a few hundred people in the audience, we're a fintech startup, and I would tell you that don't believe any fintech startup. Don't believe anything any startup tells you. We're all liars. And someone told me later, I was turning red. Like he was just left field. He says this, and I'm like, oh my God. And he went on to say, look, if anybody's out there telling you something, and especially if it's too good to be true, make them prove it. So to answer your question is, we insist, we don't try to sell anything to a bank on day one. That would be, strategically, that would be a nightmare, and it's the wrong approach, and especially given the context of what we're trying to do, and that's really transform their small business lending book. So this is millions, tens of millions, maybe even hundreds of millions of dollars. It's a big deal. So what we say is, look, let's do a proof of concept. There is a cost to it, and we absorb most of it. We absorb 95% of the cost. There's a small cost just so you're vested in the process, and this is what you get. And it's a 2-month, very comprehensive process that we work with the lender on, and we give them so much data and analytics. And at the end of that, they're not obligated or committed to anything. It's almost like a try before you buy. If you don't like what you see, like in these last 2 months and working with us and now seeing some of these numbers, if you don't like it, walk away. No problem. We'll move. We've lost a ton of money. That's okay, because we believe so much in what we're doing and how we're offering it, that if someone decides to walk away, then so be it. But we're pretty confident that once they work with us, that will be the motivation they need then to implement it in a live environment, because production is not live. It's not scoring real-time applications. It's really a back test on historical applications. So it's like a historical back test. And, that's the approach we take. And again, that approach has resonated very, very well, because here I am as a banker. My mandate, we get a lot of this, is you got to grow your loan book, but you can't take on more risk. How do I do that? And then here comes this company who's, it looks pretty good, but then they're saying, hey, wait, you don't have to commit to anything. Let us do this. It's a very worthwhile exercise. And, I remember it took us, our challenge is just getting that conversation. It took us, we were one of actually it's a top 15 US bank. It took us probably 5 months to get a meeting that we had a warm relationship in. Warm, it wasn't a cold call. It took us 5 months to get a meeting. We got the meeting, got a follow-up right after. After 2 meetings, we got an email saying, we're into a POC. 2 meetings with a bank. That's like that, a top 15 US bank. So now, by the way, it's going to take them 5 months to onboard us, and we're, I think, in month 2. But the point is, the approach we're taking, I think, really resonates with the buyer. It doesn't threaten them. It's not trying to replace anything. It's basically, here's a small fee. This is what you get. You can walk away afterwards. There's really not a lot of risk for them. It's a little bit of investment in their time, but that's, for what they get, it's more than worthwhile. And again, it has resonated. It has really been well received by the market so far.
That's great. That's great, Ron. And yeah, that goes back to my experience in the past too, with financial institutions just being so tricky to break into, and the timelines are so long, and it can stretch out and out and out across a big duration. So that's a really interesting way, because it's very low risk for them to get in, and then you can basically prove your tool based on their past data. And then they can start to leverage that without having to swap out or replace their tools. They can leverage it as an existing tool. So that makes a lot of sense. What comes next for the product? Like, how do you keep on improving the quality of the product as you go forward here?
Well, I think, with any sort of data information technology system, it's just getting smarter, learning more. $1.5 trillion is a lot, but it's not everything. It's, the more we do, the smarter it gets. We're also looking at different things, meaning we've talked a little bit about, in the last few minutes, about how we work with lenders, right? Directly. What I haven't talked about is some of the things we're doing on the non-lender side. So without naming names, I believe, though, we are going to be awarded 2 independent contracts in Mexico with the 2 largest credit bureaus down there. And what we're going to be doing there is developing a product for them. It'll be, again, white label. There's no Uplinq branding anywhere. We're not a consumer brand, that they will be then able to take to banks and enable them to use the bank as a small business score. So really think FICO. Really think the FICO approach, which would be then, to answer your question, like, huge, because now that's a completely different perspective and a completely different opportunity, all in sort of under the same umbrella. So those are some of the things that we're working on. We're also very, very focused, especially in what we call underserved segments. And so what do I mean by that? Well, small business as a whole has traditionally been an underserved segment within financial services. You've had consumer and retail, you have corporate commercial, and you've got small business somewhere in between. And like, where does it really sit? However, if you then start to drill down a little bit further within small business, there are segments of populations that are really even heavily biased against. So women, people of color, different minority and ethnic groups, like my family, like my dad. And statistically, those segments within the small business segment, which to begin with is underserved, are even greater underserved. So there's an opportunity to help these lenders reach some of these population segments and really focus on better lending practices, fair lending practices in a way they haven't done before. So we're very heavily, you asked earlier, we're very heavily invested in data points and data sets that really look to address that. So we're working on a bunch of different things. It's we're trying to stay focused in the sense that we're pretty much focused on small business, because we do get asked all the time about consumer. We get asked that every single time. Do you do consumer? And the reality is our models could work in consumer with some, not necessarily a lot of adjustments, but some. But we're trying to be very focused and stay primarily in the small to sort of medium-sized business range. So that's a little bit what we're doing in terms of product.
That's great. I'm sure consumer comes up all the time because that's a bigger and bigger area. And I think especially now with so many e-commerce businesses and so many companies that are really just one-person companies, and you can really run a company as a single person if you're doing it all through the internet and everything, that it's really interesting to see that become more and more of a thing as well. So that sounds like a interesting potential for the future, but it makes sense to focus on what you're doing now on that front.
Yeah, I mean, for us, consumer is something that we see as maybe an organic type of opportunity. And what do I mean by that? So we're right now finalizing a contract with a top 20 US bank, and it's small business. But within that, there's already an immediate opportunity to leverage into commercial. But we've also been talked to about the consumer side. Now that is enormous. Like that's so much bigger. And for us, that would inherently make sense if we're already working with that customer. We've already got integrations in place, contracts in place. Organically, that would make a lot of sense. We're not cold calling anyone trying to sell something we're not focused on. So, there are those opportunities that we would evaluate today. But yeah, we're pretty much 100% focused on the small business enterprise.
Are any maybe roadmap question, but just out of curiosity, are any B2B type businesses interested or clients as they evaluate their own customers and especially in larger projects they may take on with them?
Oh, 100%. I mean, I said earlier, small business, it's the backbone of the global economy. Well, the World Bank, this is a few years ago, released a study that this is 2020, and these studies don't run every year or two, something like 27 trillion in small business lending worldwide. And they estimated another, I don't know, it's like 70 or 80% of which is actually not in that number, that is still underserved. The point is, it's enormous. And this isn't consumer, but it's enormous. So to your point, Josh, it's not just banks that we would work with or we do work with. We will work with any sort of lender to small business. Now, we are careful because, Josh, you saw it yourself when you were applying for all these different loans. There are a lot of predatory lenders out there. We won't work with a predatory lender. Now, you may not know you're applying to a predatory lender because, if you read up front what you think are the T's and C's, you might think, okay, maybe this is a 10% more than the bank is charging. Okay, I'll do it. But then, the fine print somewhere on their website, you start doing the math. Oh my God, I'm paying 70%, or I'm paying 100%. So there's a lot of that out there. We try not to work with lenders like that unless they look to price differently. But definitely, to your point, there are all types of lenders out there, good lenders, very good lenders to small business, and lenders who are, trying to do good and get more capital into the hands of small business, and different types of lenders from, trade finance to merchant cash advance to, all kinds of different types of small business lenders. And absolutely, we've done some work with some of those. We've been mostly focused on banks to date, but definitely the opportunity to work with any organization that lends money to small business is on the table, and that's exciting.
Awesome. Any, before we jump into the demo, anything we didn't ask that we should have asked, or anything you want to share with the audience?
I mean, ask that you should have asked. I don't know how to answer that. This is my fifth startup. Somebody asked me the other day, what would you tell your younger self other than don't do it? I threw in that last part. And I'll just end with just a quick little story. I remember this, and no matter how young or old we are, we always learn. So this is something, maybe 2011. So I was still, a little bit older then. Even I was sitting in a CEO's office and, I was just like, I'm all hyper and going crazy and too much on my plate. And he says to me, I have to ask you a very important question. And he says, he asked me, how do you eat an elephant? And I'm sitting there and I'm going, how do you eat an elephant? Why would you want to eat an elephant? Elephants are such an animal as well. Who would eat an elephant? That's got to be illegal. And then I'm thinking, and I'm sitting there talking to myself in my head, and he's just watching me. And then I'm starting to think, okay, let's go through this. If I were to eat an elephant, would I use a knife and a fork? And he's sitting there looking at me. He goes, what are you doing? I said, well, I'm trying to work this out. He goes, no, man. It's not. You're not meant to answer it. The answer is one bite at a time. Just take things slowly. Just take it, one step at a time. And it's interesting. And I bring that up because every time I go crazy and I go hyper, even today, I remember this elephant story. And an elephant story that, really not that long ago, I learned. So, I just say that it's, to any entrepreneur, keep grinding it out, keep sticking it out, but just it's one bite at a time. It's one step at a time. It really isn't, even though we want it to be, it really isn't built in a day. So.
Yeah, that's great advice. And the extra energy is, I think, what separates a lot of entrepreneurs from successful ones to not. Before we jump into the demo, just want to make sure you have an opportunity to share how should people get in touch with you who would be interested in learning more about Uplinq?
You can visit our website, which is Uplinq, uplinq.co, not .com. There is a .com, not us. Or just reach out to me, Ron Benegbi, on LinkedIn. I am the only Ron Benegbi in the world on LinkedIn. So if you find another Ron Benegbi, first of all, get in touch with me and let me know who it is. But there is no other Ron Benegbi in the world on LinkedIn. So you can't go wrong there. You can find me pretty easily. And I'm a LinkedIn troll. I live on LinkedIn. So, yeah.
Awesome. Well, thank you so much, Ron. We'll jump into the demo and really appreciate your time today.
Okay. Thank you.
Thanks, Ron.
I'm going to show you today a demo of the Uplinq credit decision support technology. This is Abhishek. I'm the head of product at Uplinq. So let's begin. Just for context, this is a UI that we have built for demonstration purposes. All of the output can be passed on to your lending origination systems or decision platforms via APIs in real time. So let's imagine I'm looking at an application queue for an underwriter at your lending institution. This is an example from one of our clients based out of US. So let's choose one of the applications, Alberex Inc. Underwriter would see the customer information on top, the name of the customer, the name of the principal owner, where the business is located, which has a hugely important role. Uplinq, we have access to 10,000 plus data sources in 150 plus countries globally, which means we are not only looking at traditional sources of information, the information that you as a lender is collecting about the business principal, their credit reports, their financial statement, but we also bring a lot of alternative data sets, external macroeconomy, microeconomy, regional, location-specific data, essentially to understand the economic potential. Now, the two most important things that Uplinq provides you via output is estimate score, the risk and power. Risk is the probability of default. So what Uplinq provides is not a score like a credit bureau, which is a 3-digit number or an alphabet soup. We actually provide a probability of default, and the power is how strong or confident the model is in explaining all the variability in the risk that exists. So let's move ahead to pre-screen and fitment section on the left. Think of this section as all the criteria and guidelines that a lender has to meet. So these could be regulatory guidelines like AML and KYC. These could be internal product-based guidelines or the guidelines put on by an investor on the lender. So for example, guidelines to lend to priority sector, to lend to women-owned enterprises or to minorities, guidelines for government guaranteed or government backed loans or loans from multilateral development institutions like World Bank. Think of this as customizable widgets that Uplinq can provide an output to the lender via APIs. Now, moving forward, the score summary section is essentially a benchmarking tool. So beyond the risk and power, Uplinq provides a lender a view into all the scores, whether it's a business credit score or a personal principal-based score or any internal scorecard that the lender is using. Uplinq provides a comparison or benchmark on risk and power for all these different scores. So the lender can very transparently see what is the strongest predictor of risk for this particular application. And the power, which is a Gini value, is plotted on a Lorenz curve so that lender can see how strong is the score or model for this particular type of application or business with this loan dynamics. Moving forward, Uplinq also provides detailed business and market level reasons, both positive and negative, rank ordered on a scale of -99 to +99, which brings a lot of transparency both internally between risk and sales teams and outside for the SME customer, so as to really understand what is driving the risk behind this application, both positively and negatively. Last but not least, Uplinq will look at all the data that is collected internally by the lender and externally that Uplinq brings to the table to see if there are any mismatches, there are any integrity issues, are there any issues around fraud or data coalescence by providing you ID mismatches and data warnings. So think of Uplinq as a holistic solution to help you lend effectively, manage your risk, enhance your ROI, and provide the much needed financing to SMEs at the price that they deserve so that their business is sustainable. Thank you.
All right. So everyone just saw the demo with Uplinq. What do you think, Derek? What are your thoughts of the demo and the conversation?
I think it's a great product. Obviously this is an underserved segment in small business lending, and even myself, running a successful cash flow positive business and going to a major bank asking for a loan was just to assist with cash flow is just very, very difficult. It's not an easy process, and it feels so much more difficult. And then after months of work, you get a loan that's the size of one month's payroll. It's nothing huge. So it's really interesting to see that this market segment and these financial institutions, if they have the right data to make the right decisions, feels like they would end up making more decisions to give loans, and that would end up with everybody being more successful, the small business being more successful, and the financial institution not having people go under. And so that's really exciting. And it seems like the team there has built a bit of they came in with this wealth of data that they could use to start. So they're not starting from scratch and trying to build up some model without the right data. They're coming in with the right data. And that feels like they must be way ahead of anybody else who's trying to do the same thing.
For sure. I mean, it's funny when people think of loans and they hear like 1.4 trillion. Maybe they don't think that's a big number, but for a small business, it is. I mean, what's the average loan value or size? It's, maybe it's a couple 100,000, even if it's $1 million, it's a lot of loans out there. So it is such a nice data set to create some, benchmarking, if you will, off of. And I agree with everything you said. I mean, it was painful for us to get a loan, and, our financials and financial metrics were picture perfect. It was just, we didn't have an audit. Or we weren't in business for more than 3 years at that point, or these different factors that were painful. And I think the lenders that would lend would obviously offer harder terms, and even the big banks that we talked to said, "We want to lend to you. We think this is great, but we've got some policies, et cetera." And we're only supposed to look at this data, but certainly with the tool with Uplinq, they can expand that view, and that's pretty encouraging. So yeah, great tool. Excited to watch them grow and and thrive and see what happens.
Yeah, it's going to be an interesting future. And I think this type of company and this type of data is going to become bigger and bigger. It feels like there's no stopping this path towards also on the consumer side, having this sort of personal credit across many different platforms. I know that's something that, in other countries and other areas, and, something that, Twitter or now X is trying to do with payments going in there, and you're having an account balance that can be positive or it can be negative, and you're basically assessed on your credit in real time on the consumer side. And so if that similar type of approach is happening with small businesses, and these are new areas and new frontiers with the wealth of data that's now available and the AI and machine learning that can be applied to it, I think those things combined allow companies to make the right decisions about loaning money, and that will potentially increase, especially that will help more of these smaller businesses, or even at the end of the day, the individual consumer, on being able to leverage those services much more than they have in the past.
Couldn't agree more. Great for the economy, put money in the hands of those who deserve it and can do something with it. Awesome. Well, this has been another episode of Talk SaaSy to Me. If you enjoyed it, please like us, subscribe to us, and we'll see you next time.